Thinking of investing, working, or starting a business in the cannabis industry? We've got you covered right here on Plant Problems. Hosted by Tony Frischknecht, Plant Problems takes a different approach to cannabis than what you're seeing and hearing from the mainstream media. Come along with Tony and be in the know about how to invest, work, or start a cannabis business. Let's get the show started with your host, Tony Frischknecht.
Hey everyone, and welcome back to another episode of Plant Problems. This is your host, Tony Frischknecht. Guys, please follow us by clicking the subscribe button for the podcast or YouTube channel so you will be alerted when we have new shows come out. This is also very helpful because it allows us to bring you even more free information. The more these platforms see your interests, the more we can bring you. So we appreciate that you guys are doing that for us. Today is a major milestone for Plant Problems. We are recording our 100th episode. It's super exciting for me. It's truly amazing because I've learned so much from our guests. And the listeners, I want to thank everyone out there who has made this possible, especially you guys. So in honor of our 100th celebration, I have invited somebody that I think is extremely important for the industry and somebody that I feel you should reach out when in times of trouble. She is a leading cannabis-focused lawyer who helps clients nationwide proactively plan and implement strategies to capitalize on strategic business opportunities. At the vanguard of the retail marijuana industry, she leverages more than a decade of experience, guiding clients to establish, expand, and protect profitable businesses in a rapidly evolving legal, regulatory, and financial environment. From years of interacting with regulators and taxing authorities, she knows how state and local provisions will be applied in practice and what clients can anticipate at every step of the licensing process and beyond. She vigorously protects clients' interest in tax audits and deficiency assessments at the state and local level, as well as IRC 280E adjustments. Clients value her ability to distill complex, often overwhelming information into prioritized plan of action. As a strategic advisor, she helps clients prepare and get positioned to seize opportunities like starting operations in newly legalized states, scale businesses into multiple jurisdictions, and launch new brands and products. Her clients range from individual entrepreneurs and investors to startups to publicly traded companies with operations in one or multiple states in cannabis and cannabis adjacent businesses. Domestic and international entities exploring cannabis business opportunities turn to her for problematic, industrial savvy counsel as they evaluate potential options. She also serves as an expert witness on legal and regulatory issues involving hemp, marijuana, CBD, and other cannabinoids. Before she joined Holland and Hart, she was a partner at Greenspoon Martyr, serving as chair of the firm's cannabis law practice and as a member of the management committee. I'm super excited about this guest. Rachel, thank you so much for being our 100th episode of Plant Problems. We've known each other for around 7 years now. How did you arrive in the cannabis industry?
So it's a fun story. I actually, I will always say that I did everything backwards in life. So, when I was supposed to be going to college, I was actually a ski bum and riding my mountain bike all over Durango and Telluride, Colorado. I lived there. I had kids. Then I got married. And so I was actually a mom in my 20s. And then I decided to go back to school and get my undergrad degree. And then I went straight on to law school. And I graduated law school in my mid 30s. So the timing of it was that I actually graduated during the Great Recession. So I graduated in 2007. They were firing people from legal jobs, not hiring people at the time. the only job that I could get when I moved back to Colorado and got licensed here was at a tax controversy practice. And so that's really where my background came in, tax. So I did that from about 2008 to 2010. And then I figured out in 2010 that the Colorado Department of Revenue was going to be the regulating entity of these new things, which were for-profit medical marijuana businesses in the state of Colorado, which was the first, we were the first in the nation as a state to actually have for-profit marijuana businesses at the time. And that was the state stepping in and determining how to license these businesses that had sort of popped up under the caregiver laws at the time. And that was under House Bill 101284. So I actually quit my job. I've always been an advocate for the legalization of cannabis. I quit my job, told my mom I was going to start my own practice, called up my constitutional law professor, told her I was going to start my own practice representing medical marijuana businesses that were applying for licenses in Colorado. She said, "You are going to lose your law license." And I said, "Okay, sounds good. Let's do it." So, luckily I had the experience of a couple years of tax and business under my belt. So I feel like that was a little bit unique in the industry. At the time, a lot of lawyers that had been practicing criminal defense, because people were still being prosecuted at that time, remember, in Colorado.
Mm-hmm.
And the federal government at the time really didn't know how to handle states that were passing these regulatory regimes like Colorado did back in 2010. So there was a big sort of holding of the breath to see how the federal government would react. And that's really how I started in the cannabis space. So I just started working with licensees that were applying at the racetrack. I don't know if you remember where the marijuana enforcement
Oh yeah,
was.
I remember.
It was at the racetrack, and I was there on day one helping applicants apply for those licenses, and it just sort of went from there.
So you were actually involved in the application part at the beginning more so than is that correct?
Yeah, I mean, at first, most of my practice consisted of helping people with their application process. And I don't think you may remember this, but at the time, applications were like boxes and boxes of stuff. They were doing all sorts of asking for 12 months of credit card statements and all sorts of things that they don't ask for now.
They wanted 5 years of bank statements.
Yes, it was crazy.
And that was from each owner. So in our circumstance, there were 4 of us at the time. So everybody had, I think my stack was about 12 inches tall. I can't imagine the regulators went through all that information. I don't know how they could.
Well, if you recall, they didn't really actually start issuing licenses until like 2 years later.
Correct.
So I think they figured out that this was like too much to handle. But, it was a really interesting time. And what I have to say is that operators such as yourselves were actually very brave at the time, because there was still this uncertainty as to whether the federal government was going to bust into Colorado and start arresting people that were openly selling medical marijuana. And I remember at one point in 2011, the U.S. attorney sent letters to about 50 different businesses that were near schools telling them to shut down. So, I mean, it was just a really interesting time. But, Colorado has had its growing pains. The regulators have had the growing pains. The industry has had their growing pains. And I think we really created a foundation for a lot of other states to kind of follow what we learned. And it's been interesting to see how it's all developed. But
yeah, it is interesting. And, coming to the point of, we're starting to see some success. Some businesses are starting to flourish. We've got consolidation happening. And, that's one of the reasons I brought you on today is taxes and cannabis. I mean, this has been a problem since the start of the entire industry, and it just is continuing. And so for the listeners out there, it's great that you're going through this. You guys are making money now. You're finding your foothold. The issue is, what do you have at the end of the day? This is the true meaning of, oh, have I really made it? What do I have in my bank account after I pay everybody off, from the processing companies all the way to the IRS? And then you're like, oh, I've got something. I mean, you've dealt with hundreds of individuals at this point over the last decade. What can cannabis business expect when they are being audited?
So, going back to those early days, we started seeing audits in Colorado back in 2008, 2009. The IRS was really taking a close look in Colorado. And I started sort of because of my background, working with cannabis businesses that had audits back in 2010. And, it was funny because the IRS's approach to an audit has actually changed over the last decade. I think they were learning a lot or trying to figure it out. And I actually FOIA'd all of their training materials so that I could kind of see this evolution of their thinking of how they were approaching examinations, because I had seen it in real time. But yeah, I mean, audits are going to be a regular occurrence in the cannabis industry. I don't think that changes anytime in the near future. I don't think it changes necessarily when we have federal legalization. Part of the main issue as to why tax authorities audit the cannabis industry, so it's considered a cash-intensive business, and the IRS likes to audit all sorts of cash-intensive businesses. Cannabis is no exception, but add the fact that it's federally illegal, and they want to make sure that people are complying with federal tax laws. But back in the early days, it was much, much more difficult to represent and to handle a cannabis audit because we had this sort of albatross of federal enforcement hanging over all of these businesses. So a lot of the companies at the time didn't even keep records because they didn't want to have that paper trail of the receipts or what they paid somebody for cannabis. So that makes representing a company in an audit much more challenging because they just didn't have records at the time. So
I'll speak for those guys. What it comes down to is coming in from the shadows into the limelight, right? Mm-hmm. And having those thoughts of, if I share myself, I share in this, then they have evidence against me. I know working with my partners, my business partners, it was like, well, we're either in or we're out. You kind of had to decide, right? And so many people did, and so many people didn't.
Right. No, I always say that you can't straddle both worlds. You can't be in the sort of the illicit market at the same time you're in the legal market. You got to be one or the other. And you do have to be tax compliant, as you're well aware of, in the cannabis industry. And I think businesses have learned over time, not only to feel more comfortable about the fact that if they remain in strict state compliance, they're not necessarily going to be rated by the federal government, but they've began probably about 5 or 6 years ago, I started to see businesses really take seriously record keeping and making sure that they were keeping all of their receipts, et cetera. But I could sort of go through with you, if it's of interest to your listeners, kind of what to expect when you get that inevitable letter from the IRS that you have been chosen for an audit.
That would be great. I think just understanding, getting the IRS letter, forms you're going to get it in, because it's going to come from different places, right? Mm-hmm. I haven't heard of anybody scamming the cannabis industry with taxes, but there are those people out there that are out scamming the IRS. So, how do you protect yourself? I'll just let you go into it, but these are some of the things that I think of as a business owner. What do I need to be looking for?
So first and foremost, we talk about record keeping. That is so essential, especially today, to make sure you keep all your receipts, you have everything documented, you keep good, up-to-date books and records. That's very important. That's always going to help you if you are audited either by the IRS, the local jurisdiction, the state. That's always going to be helpful. So you want to keep good, organized records. That's the first tip I can give cannabis businesses. I think for the most part, most people know that. But if
but that's a great point, because as entrepreneurs, we get so caught up into trying to succeed.
Mm-hmm.
we forget about those details. I'm guilty of it myself. So that's 100% a great
It can
point.
save you, if you get audited, it can save you so much money if you have good documentation. So, and I'd like to look at things from a dollar perspective. Like,
Mhm.
is this going to save my client money at the end of the day? And good record keeping really does. Filing on time, paying on time, all of those things are going to save you lots and lots of money because the
Do you
penalties
need,
are really bad.
as a startup, do you need a CPA? Can you get by with a bookkeeper? I mean, what's the, to really, because we're talking, when we're talking about this, we're saving a lot of dollars. We're talking hundreds of thousands of dollars, even millions. This is extremely important. So, would you recommend one or the other, or just do what you can, or how do people go about that?
I think having a good bookkeeper and a good CPA, and you want to have a bookkeeper and a CPA that really work together, and that you want to have a CPA that really understands how to keep books for a cannabis business. And believe it or not, like, your chart of accounts is going to look a little different than any other business because you're in cannabis, because of that thing that we are all aware of, which is the Internal Revenue Code Section 280E,
Mhm.
which has a tremendous burden on the industry, but you have to be thinking about your books with 280E in mind. And so your accountant needs to have some knowledge of 280E, and they have to be able to, I think, setting up your chart of accounts from day one with 280E in mind, what is or isn't a cost of goods sold, what is or isn't disallowed under 280E is very, very important. So you need people that have knowledge, and it's hard to go back and reorganize if you haven't done it right from day one. So I do think that those are essential for your cannabis business. Understanding your deadline, having a fundamental knowledge as to what is or isn't a allowed expense is really important too. And you don't really have to know too much about the tax code to understand it. To give you just a basic overview for any business owner out there, the way the IRS looks at 280E is it's going to be a disallowed expense unless you can put that expense and capitalize that expense into your cost of goods sold, meaning you get your gross less your cost of goods sold, and then that's your income. So certain expenses can be put into cost of goods sold, but you have to have an understanding of what those expenses are. And for that, we have to turn to the regulations and the code section 471. And to be very simplistic about it, if your expense has some direct or indirect nexus to production, that is a cost of goods sold. The cost of your product, less trade and other discounts, plus acquisition costs, is a cost of goods sold. That's it. Everything else, probably not a cost of goods sold. Now, there's a lot of debate as to what you can put into cost of goods sold under section 471. And that's where, as a business owner, you want to rely on experts and your accountants, your lawyers, your CPA, your bookkeeper to kind of help you with that. But you really have to have an understanding when you're buying something or having an expense as to how much that really is costing you. So for example, marketing is a disallowed expense under 280E. It's a selling cost. You're spending tons and tons of money on marketing. That's going to cost you probably 35% more than the dollar you're spending, because you're going to be taxed on that expense as if it's income.
That's a tough one for people to grasp. I don't know how many times I've discussed it with people. They do not get that. So yeah, if you guys spend 100,000, you're going to be paying an extra 35 for that 100,000 at the end of the year.
Yeah. And I mean, people try to be creative about marketing, and I don't know that the IRS is right that certain marketing costs, can't go into cost of goods sold but that's a really nuanced question. And generally they will always disallow marketing. They're going to disallow your bank fees, which I've gone back and forth with IRS revenue agents on this, because frankly, it's in everybody's best interest for cannabis businesses to have bank accounts, and they need to keep records. And, why isn't that an indirect expense, at least as it relates to the grow? But they typically are going to disallow banking fees.
Well, and those banking fees are astronomical especially in the newer markets, because they can charge a lot because nobody else is allowing it, right?
Yeah. So thinking about things like, how can I leverage social media and free marketing and these types of things, trying to be thoughtful about your things. And unfortunately, depending on the type of license you have, you can have a much more punitive tax treatment under 280E if you are a retailer, for example. If all you are is a store, the IRS is going to look at you, or at least at the examination stage, and we can talk about this as it goes up the chain in the IRS, but typically an examiner is going to say, is going to allow what you paid for your product. They're maybe going to allow transportation costs. They might allow some allocations for labor and those types of things if you can tie it to acquisition, product procurement, or production. But that's a tough argument. I just want you to know that that's like a hit or miss with the IRS. And we can get into the details later, but actually the IRS just issued a chief counsel memorandum, which I'm happy to send to you, on acquisition costs, which basically they were very restrictive as to what they consider an acquisition cost. Retailers are going to be treated much more punitively than a processor or a cultivator. And then a vertically integrated company might have a little bit of expenses that are shared amongst the whole group of licensees. So they may have a little bit of flexibility in expenses and putting things in the cost of goods sold.
You've got only so many options, what you feel like when you want to start a business in the cannabis industry. And, to tell you the truth, the most expensive entry point is the production point.
Right.
So you'll find a lot of people, and guys out there listening, I know it's a lot of money to open a retail store, but magnify that by 10 if you want to open a production facility. So a lot of people fall into that spot, and then if we want to go into like social equity, I mean, those guys are going for retail because it's going to be the easiest entry point.
Well, interestingly enough, where 280E really, really, really hurts, because you're able to scale the larger you go and the more money you make, it hurts the smaller businesses the most. If you are, selling a ton of cannabis, tens of millions of dollars of cannabis at your retail store, it's not going to hurt you as much as if you sold 500,000 and you're really just making a little bit of profit. It's going to wipe out a lot of your profits. So 280E really, really affects those startup businesses, those new businesses, and definitely on the retail side. But it hurts all over. It really does. But I always think it's kind of ironic that you're going to get a much more punitive tax treatment if you're selling pounds of marijuana versus grams of marijuana. Or I'm sorry, if you're selling grams of marijuana.
The reverse,
pounds of marijuana. Because as a cultivator or production, a lot of your expenses are indirectly or directly related to production. So you can put those in the cost of goods sold legitimately, and they will be allowed. But it's complicated and it's really nuanced. And what I can say is there's a lot of disagreement amongst tax professionals as to what you can and can't put into cost of goods sold. And that remains today. And there even is disagreement amongst IRS examiners as to what they will allow and what they won't allow.
Well, I mean, it seems like that falls back onto the, the situation that the IRS is still learning how to audit these companies. So those arguments are coming up. I mean, I remember talking to our CPA about, when we started, how we should set up our systems, and there were no direction from the IRS. You couldn't get any information. So you were left with a blank sheet of paper, and you basically had to take the advice of your CPA that had never done this before either. So at least we don't have that, at least it's not that gray of an area anymore. At least we're getting something. But I mean, in dealing with these audits, one of the things that I've noticed is most people aren't fighting them.
Yeah, that's unfortunate. In my view, only for one reason. One, I think, first of all, the way an audit works is you're going to get this letter. They're going to ask you for a whole bunch of information. Sometimes they decide they want to go on a fishing expedition. When you get audited, you should understand that the IRS is entitled to certain information, but they're not entitled to some of the information they try to get. And a lot of times they're doing an investigation. So they're trying to figure out if there's affiliated businesses, who, what's the ownership. They may open up other audits that once they start with the business. A lot of times they open up the individuals for audit, especially when they're flow through entities. They may open up affiliated businesses that may have common ownership. And by the time you get that audit letter, they've already done an initial investigation into your company.
Mm-hmm.
They already know how your EIN is connected, what social security numbers are connected to that EIN. So it's not like they don't know anything once they send you that letter. And, if you have good books and records, there's not too much to worry about, except you want to understand how your CPA or your bookkeeper approached 280E. You want to know if you've been compliant, and you want to know what to expect. It's going to be a challenging time. Audits are never fun. I'm sure if any of your listeners, probably most of your listeners, have gone through an audit at some point. I will say the worst case or the worst outcome you're probably going to get is at the examination stage. And the reason that is because, first of all, there's a few things. IRS
you say worse, we're talking penalty or assessed.
Penalty is the potential deficiency, and I'll explain why that is.
Okay.
It's because, first of all, what I found is that examiners are being trained in real time. The IRS has not hired a lot of people. They're understaffed. They're focusing on these cases. They have not a lot of training that they've provided to IRS examiners. They've changed their approach to examinations over time. A lot of people don't understand how cannabis businesses operate that are examiners. And I'm not saying these aren't smart people. It's just they don't understand the industry necessarily.
Mm-hmm.
So there can be inconsistent approaches at the examination level, if from auditor to auditor. And then their primary job is to protect the government's interest. So if they think that maybe that something should have been disallowed under 280E, or maybe it wasn't allowed in cost of goods sold, or they're not real sure, they're going to err on the side of the government. And they're going to say, we're going to protect the government's interest, and we're not going to allow this expense. So it will become a deficiency. And so they're going to try to get as much as they can at the examination stage to protect the government's interest, because you have appeal rights. And so in an examination, once you've gone through the process, first of all, you can always communicate with the examiner's manager. You can always say, well, I don't really agree with this report, or I don't agree that you disallowed that expense because I think it's related to production. You have opportunities to have a conversation with them. It isn't like, here's your report, you're now screwed. Mm-hmm. There is an opportunity to have a conversation. And then once you get your revenue agent's report, you do get an opportunity for what's called an informal appeal. And that is the next step, which is to basically, they take the file out of the hands of the examiner. They give it to an independent person to look at the file to determine whether the proper adjustments were made. And a lot of times those appeals officers have a little bit of discretion as to hazards of litigation, and they may take a different approach. So having somebody look at it independently, they may say, oh, you're right, you provided documentation, I can see how this is related, I know that this is allowable under section 471. And then the other thing I would point out is that in the exam stage, examiners have a lot of pressure to close cases, to move cases.
This
So a
is a
lot of
big, this is
times-
a big part. This is actually the question I want to talk, because
Yeah.
I know Rachel from personally working with her, and this is one of the things that was really shocking to me, because of the instance of them having deadlines. Like, they're sitting on their desk, and I never knew this about it, but I'll let you explain, because you're more fluid with it. But I just felt there was a laziness to it, just kind of like, let's get it on down the road. I mean, I didn't know, it didn't make sense.
Yeah, I mean, what I find is that there can be a lot of errors at the examination stage. And that may be just a math error, but it could also be that they didn't look at some of the documentation you provided, or they misunderstood, the expense, or I mean, there could be a ton of different reasons, but we've literally found significant math errors that occurred at the examination stage that were really pretty obvious and are easy to get adjusted.
But these guys are hired by the government. They're IRS agents. Simple math should not be one of them that we have to follow up on. I would think, I mean, in my mind, that's what I'm thinking.
Right. But understand that, I mean, I'll give them a little bit of credit because I wouldn't want their job, but they have a hard job. They have a lot of cases open. They're doing a lot of examinations at the same time. And sometimes they're pushed to sort of close cases. The other time too is they want to get it, we've had a number of circumstances where somebody's gotten promoted in the middle of an exam. And so then they're handing off your file to somebody else who picks it up, and then they don't really understand the background of the business. And there can be a lot of situations. But, I would really say, unless you're facing a no change audit or the adjustment isn't significant at the examination stage, at the very least, you should, take your case, have it looked at by somebody who has experience in this area, and then take it to the next level and communicate with another independent party, which is appeals. I think at the very least, it makes sense for cannabis businesses to take that opportunity. A lot of times people just say, I'm going to agree because I'm done with the IRS. I don't want to deal with this anymore. Too much pressure. There can be reasons why you might want to just get it behind you. And I understand that. But because there is this opportunity to appeal, and it's informal, and it shouldn't be too costly to at least have that conversation and to take another look at the case. I think that that's something people should take that opportunity. After you go through appeals, if you end up not settling, you then have the opportunity to go to tax court. And what a lot of people don't understand, and this may be a reason some people just want to close these cases and put it behind them, but these cases, as you may be aware of, take a very long time.
Yeah.
Even if you go through the appeals process. And that's mainly because the IRS is understaffed. COVID certainly did not help. But remember, until you get that bill, and I don't mean notice of deficiency, you do not, that assessment is not on your account, meaning you don't owe that money until the final, you've exercised all your, procedural and due process.
Mm-hmm.
So it does make sense to me to take, even if you're representing yourself pro se, to even take it to a third party, because there could be some things that the examiner got wrong or maybe just didn't understand about your business. So it's worth looking at. And what I've found in my experience is that 99% of the time, what I'm being paid is worth it because the reduction in tax is significant. And I'm not trying to sell that, but you do have to make that cost benefit analysis. Is it worth paying an attorney or another CPA to take another look at this case or to assist me in this next stage? That's always going to be a dollars analysis.
Yeah. So with that said, does the IRS have an unlimited resources to fight these?
Well, I mean, just as a general matter, they tend to if you're taking a case to tax court, they're settling 98% of the time.
Okay.
So they cannot litigate every single case. They can't. So that's why it could be beneficial to take it to the next level, or to at least have a conversation with somebody who might have a better understanding of the tax code, who maybe isn't new, who maybe has handled other cannabis cases before. There, like I said, there can be a lot of reasons to do it. But again, if your deficiency is, something small, it may not make sense to take it to the next level because it could cost you some time and money at that point.
Yeah, but most of us that have been involved in cannabis, it's pretty significant no matter how you look at it, just because of the way 280E is kind of focused. It's going to be, it also, the other side of this too, it also depends on how aggressive you were with 280E, right? I mean, that changes everything too. It's like, how far did you push this to, reduce your total tax liability? And some people push it more than others. Yeah, they really do. And it's a matter of, okay, how do you offset that risk? Do you put that money aside just in case, right? Do you have these different programs you set aside? Because still, it not being federally legal, there's a lot up to interpretation. However, I still think that's in the benefit of the business owner, because there is a lot of up to interpretation that gives attorneys a lot of room to argue their points, or why this should be a deduction, right? So,
well, I want to make one other point.
Yeah,
when it comes
go
to
ahead.
Examination, because I think this is important. So one of the things people need to understand about these friendly examiners is that they're trained investigators.
Okay.
They are trained to investigate. They're trained to get information. I've never put my clients in front of the IRS because they tend to overshare. No offense to my clients, but that's one of the things you have to think about, because I know a lot of business owners might be inclined to be like, my records are great, I'm just going to represent myself. And I'm not saying you shouldn't do that. I'm just saying that you have to understand that the IRS is looking for information, and sometimes they do go on fishing expeditions. And I can tell that by the initial document request that we get. And you have to kind of have an understanding of what they're entitled to and what they're not. Should be trying to keep the information related to the scope of the audit. And a lot of times they ask for things that are completely outside the scope. That doesn't necessarily mean you have to provide it. So just something to think about.
It's like when you see people get pulled over and the cop's like, can I search your car? And you're like, yeah, go ahead. When they need a warrant, they can't just search your car, right? And yeah, like you said, investigators, right? They're going to ask for whatever they can to see what they can get away with. And, if they're dealing with an attorney, at least a halfway decent one, the attorney is going to be like, no, we don't owe you all this. We're going to give you this because this is what you're allowed by law. And I don't know about you, but when you're running a cannabis business, you don't really have time to learn all the different laws that, aside from what's focused on your regulating the cannabis industry, to keep the business going at the same time. It's like, you don't have time for that. I've seen so many times where people skimped on finding the right attorney, or getting the wrong CPA, and they pay for it.
Penny wise, pound foolish. I see it all the time. And
Exactly.
it really does equate to a lot of dollars.
Yeah.
And I say the same thing. I mean, the other thing people have to think about too is it the payment of taxes? Because I see this as like a chronic problem in the industry, and it's unfortunate. And I think a lot of it has to do with 280E and the fact that a lot of businesses or business owners don't understand how 280E impacts their business until their CPA prepares their tax returns and says, here's how much you owe. And unfortunately, you have to plan for 280E. So when I say keep good books and records, have a general understanding of 280E, but also understand its impact on a real-time basis so that you can plan, because a lot of cannabis businesses are flow through. What I see happen all the time is that business owners are saying, well, I'm not making that much money because I know how much profit I have, and I only have to pay this amount of tax. And so when they're making their quarterly tax payments, they're underpaying, or they're not maybe paying at all because they don't think they're going to be profitable that year. But then when their tax preparer prepares the return. Tax preparer says, well, I know you don't think you made a profit, but there's 280E and now you owe $150,000. If you haven't put that aside and you don't have that check to write to the IRS, you're looking at tens of thousands of dollars in penalties for failing to make estimated tax payments on time, for late payments. It could cost you so much more money if you don't plan correctly. And that tends to be a very big problem in this industry.
Yeah, well, and I mean, I know you deal with local tax issues as well. So stack that on top. What do you see that's happening on the local side? Right there.
Yeah, well, what we see on the local side is every local jurisdiction is doing audits for if they have excise tax, sales tax, use tax, business property tax. Those audits are also occurring. If you could end up, and I've seen this happen, the trifecta where you're being audited by your local jurisdiction, your state, and the IRS, that does occur. There are ways that you can delay things, but that actually does occur in this industry.
There's not a drink strong enough for those days, I'll tell you what.
But the state, as many cannabis businesses know, a lot of cannabis businesses now are going through their second sales and use and excise tax audits.
Why is that?
Well, because they basically, the look back period is 3 years. So they can look back 3 years. So after 3 years pass, they might be looking at you again. So, a lot of cannabis businesses are now being audited every 3 or 4 years. That's not unusual at all. I'm handling a lot of state audits that are now the second go around. But understand the same thing occurs in a state audit, right? State audits are interesting. A lot of times they might apply what's called an error method. So they might audit you for 3 periods, right? And see if you're on point with your sales tax or your use tax or your excise tax. And if you have an error in that one of those months or 2 of those months or 3 of those months, they will average that error and then take it through the entire audit period. That may be completely inaccurate, meaning you may have just screwed up the 3 months that you gave them, and you may not owe any tax on the other periods, but because they take that error rate and apply it across 3 years, you end up with a big giant tax bill. So I want people to understand that is how the state of Colorado, that's their method of auditing. So a lot of times it's the way, unfortunately, you may just have to produce additional information, but you don't owe that tax that you get a bill for because they've just made averaged an error and then decided that you must have made it in all your months.
That's really crappy too.
Wrong.
Yeah, it's really crappy too, because it's like, okay, so what you did for a quarter period means you screwed up 36 months. I mean, that's so ridiculous. If you were really thinking and really want to pull this out, how can that be possible? But it's been so long. I dealt with that with you. We talked about that. We went through that, and it was like, how could they do this? And
a lot of times too, it's just a error in when the way the POS calculated, like they did 30 days instead of 31 days. And so you have an extra day in 1 month and not enough days in the other. And so it looks like there's an error, but there really isn't.
Gotcha.
So honestly, sometimes it can be easy to see, but if you don't recognize their methodology, you might just be like, oh, they audited me and now I owe $100,000. I'm just going to pay it. But you may only owe $2,000 or you may not owe anything at all. So it's something that you really want to take a look at, or at least have an understanding, or at least just look at your books and records and tie your POS to what you paid in sales tax or excise tax and make sure it's correct. And look at all the months to see if it's just a gross error. And a lot of times it is. I can tell you that.
Are you finding that, Colorado's a fairly mature state when it comes to cannabis? Are you finding that the experience of the IRS is growing from Colorado out to all these other states, or what are you seeing out in the rest of the United States?
So as an attorney with the IRS, I can represent people in all 50 states in front of the IRS, seeing audits in Maine, Massachusetts, Florida, California, the whole West Coast, Oregon, Washington. They're everywhere. And in fact, I brought with me today the TIGTA report, which is the Treasury Inspector General report on the growth of the marijuana industry warrants increased tax compliance efforts and additional guidance. Now, I found this thing to be quite handy for a few reasons. One is they kind of said, we think there's a lot of money left on the table. We want to, because nobody's being compliant in their 280E filings. So we're going to audit the crap out of the industry. That's sort of the
Okay.
paraphrasing here. But they're like, you should really audit more. That's what this
So
says.
if you're in cannabis, guys, you're going to get audited is what she's saying.
I think you should expect it. It may not happen to everybody, but you should plan for it. And you should keep your records as if you're going to be audited. But the other thing that this report said, there's two other things that are of importance. And one is that this report acknowledges that the IRS has not provided appropriate guidance and needs to provide more guidance to the cannabis industry on how to comply with 280E and probably how to comply with 471 if you're a cannabis business. I have used quotes from this report to have penalties abated in examinations or not applied. There are good arguments to be made still. If you try to comply with 280E and that's another reason you may want to go to appeals, because the penalties, you may be able to get the penalties waived where they're being applied in the examination because you tried to comply, or your CPA or your accountant tried to comply with 280E, but there is so much uncertainty. There's so much disagreement among CPAs on how to even prepare a cannabis business tax return that you usually, if you made some effort and you make a good argument, you can usually get your penalties completely wiped out. Where penalties are not going to be going away is if you basically said, screw 280E, I'm just going to be a normal business. I'm going to take all my below the line expenses. That's where you're going to have a very difficult case in getting your penalties removed in an examination. And those penalties can be very, very significant because a lot of times it's substantial understatement penalties, so they can be very big. And at the very least, even if you're representing yourself, you should be going to if your examiner isn't saying they'll waive the penalties, you should go to the next level and at least ask the appeals officer if they could abate the penalties, because you may be able to get those removed. So there's some good information in this saying, really, we haven't provided any guidance as far as, and by the way, tax preparers aren't consistent in how they prepare tax returns for cannabis business.
So you've been using it as ammunition pretty much for your
I
cases.
literally quote from it. And then the other thing that is really interesting, which you may have heard of because there was a lot of talk about it, was this new section, IRC 471C, which there was a lot of buzz about, especially when this report came out, because this was a change in the tax code that occurred with the Tax Cuts and Jobs Act. It was effective starting in 2018. And basically 471C, basically seemed to say that a qualifying taxpayer can choose a method of accounting for inventory that conforms with their books and records. So if they were under 25 million, they could sort of, and what this report acknowledged was, look, this could potentially alleviate the impact of 280E. 471C, if you just say, well, I'll just put all this stuff in the cost of goods sold, potentially could alleviate the impact of 280E. And they acknowledged that in this report. So there was a lot of buzz about it. But
especially if you're starting a business. I mean, if you can start from there, if your CPA out there says, hey, this is how we're starting it from the start, and I know I have the backing I have the ammunition to back it up. Let's do this way. I don't think most people still know about it.
No, I don't think they do. But what you have to understand too is that since that report came out, the IRS actually drafted regulations surrounding 280E. And what they said was, you can't use 471C to turn a non-recoverable cost, meaning something that's not cost of good, and make it into a recoverable cost.
Okay.
So
they try to close that loophole is what they're trying to do.
Right. It can't be used to capitalize a cost, which is otherwise non-capitalizable and non-deductible. But that's not exactly true, because the IRS has acknowledged and even, given guidance on this, that expenses that you can't take below the line as a cannabis business, meaning in that expense section saying, here's my expenses. You can put some of those in the cost of goods sold if under 471, if they're related to production directly or indirectly. And so I don't know that that's actually the case. And so there's a lot of discussion and disagreement as to, well, is the IRS really not right in their interpretation here? Or at least how they're looking at the regs, that it's just a timing provision and it's not really meant to be applied this way. So that's some conversation people should have with their CPAs and their accountants. I wouldn't call 471C a loophole.
Okay.
I don't think that's an accurate description of it, but I do think it's interesting. And I do think that people who are CPAs and tax attorneys that have much more knowledge than I do about inventory accounting can probably give some really good guidance on that. So
there's a lot of room for being able to argue their point across to get some of these deductions, whether or not the IRS came out with more instructions on 280 or not. Is that correct?
I think maybe we don't want them to give more guidance, to be honest.
Correct. Yeah.
And we have to follow it. So yeah. I feel like
it's a very good point.
Maybe keeping it gray and then just like crossing our fingers. And I mean, my hope is that if we do end up passing federal legalization, which I think is a conversation we should have, is what does it look like? Like if Congress was to pass decriminalization, federal decriminalization or legalization tomorrow, how do they address all those people that are in the middle of their exams that are being impacted by 280E? Is there a way we could be advocating as an industry that sort of we tell the IRS, pencils down, no more enforcement. We've legalized cannabis. It should have happened 5 years ago. I don't know. I mean, I think it's something we should be having that discussion, because 280E, in my view, has always been a subsidy for the black market. The IRS does not apply 280E to your street corner cannabis dealer or your illegal grower. They are only going after those that are legal and under state law and complying with the rules.
Well, how messed up is that? Because this was started from the RICO Act from a case down in Florida, and that's where 280E came from, was from the black market. That's why they disallowed regular business deductions. I believe he was a cocaine dealer who had, that's where it originated.
Right. And he was able to take all his deductions because there was no prohibition against it. And so Congress said, well, this is unfair. And listen to their reasoning, though, which I think is interesting. You know, there's a public policy, this is a quote, I'm kind of paraphrasing, but there's a public policy against drug dealing. Therefore, we need 280E, right?
Yeah.
Public policy on cannabis has changed. There's no doubt about it. So the reason 40 plus years ago in 1982 that they passed 280E, which is literally a couple sentences in the tax code, is no longer the case. It's no longer a public policy that cannabis shouldn't be legal, or it's no longer drug dealing. So why are we applying this archaic provision of the tax code to businesses that are really trying to do everything right? I don't understand it. They're basically turning a blind eye to the black market. They're not applying it to what it was originally supposed to be applied to, which is illegal drug dealers, I guess. And so to me, that's a subsidy. I've had this discussion with policymakers and everything, like, oh, well, maybe they don't want to get rid of 280E because, you know, it makes them so much money. And the reality is, it's fictitious income. These businesses are spending the money on marketing. they don't have that dollar. It's not real income to those businesses or to the individuals that own them. So
More or
when you
less,
send
it's
them-
theft.
Right. When you send them a bill for $1 million that they never made and they don't have, you're not even going to collect that money. You're going to spend money trying to collect that money, but it doesn't exist. It never existed in the first place. So to me, I'm getting on my soapbox here, but I'm very passionate about this because it just is fundamentally unfair. It is old. It's outdated. It needs to go away. It was never meant to apply to a lawful business that's operating in compliance with the law. And we all know cannabis should not be a Schedule I controlled substance. We all know that. So
The problem is that there's case law that's backing up 280E at this point. I mean, there's stuff that even if you go to like the Harborside case, I mean, they've been kicking this can down the road and has created.
Well, yeah, let me talk about the case law because the case law is interesting. There's two things the case law does not do. First of all, we've kind of beaten a dead horse on some of the same arguments when it comes to the case law that we actually have opinions on.
Mm-hmm.
The same arguments are being recycled. And I don't know how many times you can make the argument. If they said no, they said no. We shouldn't be continuing to make those same arguments. We have to think sort of a little bit differently. But the cases that we do have opinions on they're sort of issues that are not technical tax issues. I wasn't really trafficking drugs, right? I was, and they dealt with that in the Champ case. They defined trafficking. They said it's buying and selling. So why are we continuing to argue in a case that we're not trafficking? But they went to the Webster's dictionary for that. It's not rocket science. They said, well, that's the definition of trafficking. So if you are buying or selling cannabis, it's illegal under Schedule I. They have discussed sort of the constitutionality, and I'm not saying those arguments shouldn't be raised because they should. There's actually in Northern California Small Business Assistance, that case has a dissenting opinion, which actually discusses whether 280E is constitutional. It's worth a read. But again, that was a dissenting opinion. We didn't win on that. So there are some definite constitutional issues. But, things like I'm not a drug trafficker, or you can't say that I'm doing something illegal, or you can't say that which is an argument that has been made, which I think is really funny because, when you put your shingle out and you advertise in Westwards that you sell cannabis, it's pretty easy for it's pretty obvious
to prove that you're selling.
You are selling
Schedule
cannabis.
I, yeah.
So, but what they haven't done, and the Harborside case didn't even do this. This was raised in the Ninth Circuit case, but they haven't gotten into what is allowed under Section 471 as a cost of goods sold if you're a reseller. What is allowed under Section 471 if you're, a producer. Those types of technical things there hasn't been an opinion on those. 471 in particular. So I think that's really interesting because I do think that they're saying things aren't allowed under the regs when they actually are. And I think that some of those technical arguments might be worth, I don't know if they're, taking a case to trial really depends on the facts and circumstances. Not every case should go to trial because sometimes there are very bad facts which lead to very bad outcomes. And unfortunately, we've had that happen in a lot of the cannabis cases. But we don't have those sort of nuanced tax-based arguments being made. They were made in the Harborside Ninth Circuit case, but the holding in that case was basically you didn't properly raise these issues in the underlying case, so you can't raise them now. So they didn't even rule on those. So that's something that a lot of people don't understand is that whether or not you can put officer compensation into your cost of goods sold, if your officer is doing work for the grow, first of all, that I think is something that is in the regs and is allowable, but you will have some examiners that say, nope, I'm not allowing officer compensation. And that's unfortunate because I think it's allowed. And the regs speak to that. And even the IRS training materials speak to that, which I think is really interesting. So the cases we have, I don't think some of them should have been taken to trial, unfortunately, but they were. And so we have some bad outcomes. But that doesn't mean that there's some good arguments to be made.
So we're dealing with an extremely stressful situation for the client.
Mhm.
As you're working with the client, what are some of the things you do to, help relieve them from stress or help give them some safety, something that they can be like, all right, I know I've got a good person on. I mean, how do you, because I'm sure you've dealt with all types of clients, right? I mean, you've got good ones and you have bad ones, because this is a big part of it. The patience and the longevity of how long your client is willing to say, let's keep fighting, let's keep going. So what are those conversations like when you're talking with these people?
Yeah, I mean, the anatomy of a case, I mean, as you know, I can be working with a client potentially for years, because that's how long some of these cases take to resolve. And COVID hasn't helped that situation at all. But really, I do want to try to give comfort to my clients. And my goal is to reduce your tax bill. That is always my goal, is you don't really owe the amount of money that examiner said you owed. So I'm going to try to come up with all of those reasons why you do not owe this money. And I find that my goal is to try to be like, this is not your problem. This is my problem. I'm going to communicate with the examiner. I'm definitely going to loop you in when you need to know some stuff. I may be coming back to you and asking you for information, but you have to trust my judgment to some amount, because my goal is to reduce your tax bill. And I'm doing that by it's almost like a drip of water that, makes the stone go away, right? It's
Okay.
like, that's how persistent sometimes I have to be. Is just, I'm going to keep asking or hammering on this issue because I think I'm right, but maybe I'll approach it 5 different ways to get where I want to go. And, sometimes it's interesting because the appeals officer will be like, no, 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 no. I don't like any of those arguments. I just had a conversation like this yesterday where we had made this whole big argument as to why an abatement should be granted of the penalties that were assessed in this case. And it was no, 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 no. I don't really like that. But then I said, well, how about this? Made another argument. She's like, yep, that's your argument. Go ahead and put it in writing and I'll accept it. But you never know. There are certain things that they just, and understand they have to put a reason in their file as to why they allowed something that the examiner disallowed. And so sometimes you got to go at it from lots of different angles, but you do have to have, people that have knowledge. I think having experience in this is important. The thing you have to understand, there's also a difference between a CPA representing somebody in an exam and an attorney. Attorneys have privilege that CPAs don't necessarily have. That may be very important in certain cases, but a lot of times I work hand in hand with your CPA, and I'm just giving you updates every so often to say where we're at. My goal is that it's not going to be your daily problem. You're not going to have to go home and be like, oh my gosh, I owe so much in taxes every night. I'm saying, I know this is taking a long time, but we're going to try to get this reduced significantly. So, but I love working with CPAs. I don't, sometimes they're very helpful in the examination stage. Sometimes I jump in when it's time for the appeal. Sometimes I'm there from day one. It just depends. And it also depends on your CPA's level of experience, because CPAs are very competent in most cases for handling audits of just about any business, but cannabis businesses are very unique. And if they don't have sort of experience in handling a 280E matter, or they don't really understand the nuances, or they don't, they haven't done it before, they may need some guidance. So I do work with a lot of CPAs that are trying to assist their clients in tax preparation and handling an audit. I'm happy to work with them because they have they're the numbers people, right? They do the math. But conceptually, I'm coming up with the legal arguments and the tax code arguments and the things that I, by experience, know can potentially work. So a lot of times it's a team effort. But, sometimes CPAs too, they just hand over information because they think that's their job. And maybe they're not looking at it to say, well, is this really related to the audit, or should we be providing this? So they're not looking at it from a legal perspective or a taxpayer rights perspective. They're just like, I'm a CPA. I got to hand over whatever the IRS tells me to do. So, I think there's a role to play for CPAs, certainly, but just a client should understand the difference is all I'm saying.
Yeah. The understanding that having a good CPA, somebody that's experienced in cannabis for sure. I mean, I don't know how many times I've said it. If your CPA hasn't heard of 280E, you better get a new CPA. If by now, how long it's been discussed over the last decade so much, and you got to have somebody in there that knows what they're doing. I think the big thing coming from a client's perspective is that first 6 months to a year is brutal, because we don't know what, attorneys like yourself, that basis. So you just say, oh, well, we give updates, we make it our problem, and then we show. All we look at is, oh my God, we're going to owe $2 million, or, oh my God,
Right.
we're going to owe $6 million. And it's so far outside of what you've made off of the business that it's hard to comprehend that. And it puts you in a really bad place, because it's not only just extremely hard to work in this industry, but when you think you've seen a little bit of light, then all of a sudden the government is there to slap you down and say, oh, now we're going to take everything and more, which is more so like a thug or a mobster would do, is be like, oh, by the way, you made $100, now we want 150. You're like, well, where am I going to come up with that? I just gave you everything I had. And it's extremely, I'm very fortunate that we met. You made the whole process so much better for me and my business partners, that, I really appreciate everything that you've done for us. And, I really want people to know that there are people like you out there that are fighting for them, because some people don't have anywhere to turn. They don't know where to go. And so knowing that there are awesome attorneys like you out there that are willing to take it on themselves is amazing. So, I want to thank you for that. I mean, for the listeners out there, I've been through, a bunch of us have been through some audits for several years. I think I'm coming up on finishing some out around between 5 and 6 years. You forget after the fourth, you're like, it's just another year.
Yeah.
But these things do take time. Like Rachel said, that there is, the worst part is the beginning. The very first calculations that the examiner gives out are going to be the worst. But if you really feel that you don't know where to turn, there are options out there like Rachel Gillette. These people do this day in and day out, and they have tons of experience doing it. And so just getting a regular attorney is not the direction, or just a regular tax attorney. They don't understand everything that's involved in this. And this is why it's so important. I mean, I don't want to share facts because I have some business partners that are involved, but we're talking high 6 digits that we were able to save just by allowing the attorneys to do what they do best. Yes, we spent some money on attorneys, but at the end of the day, spending money for an attorney instead of paying the IRS, I mean, you weigh your options here, and it just makes sense. It's like, why would I pay them any more than I have to? So, as you're looking for options, or if you're just looking for somebody to start you off right, I want to put Rachel's name out there. She's with Holland and Hart. She is actively doing this, and I don't think she's going anywhere. She's in it. She's been doing this for a long time in cannabis solely. So what are we going on? 11, 12 years now? You said
11
2008?
11 years. Yeah. It's been a long time.
Yeah. So I think she's one of the few that is really standing out, and she's not extremely in the face of the public because she's so busy working. I mean, what it comes down to is she is busy working the system and fighting for people like you every day. So, Rachel, I really want to thank you for being on the show with us today. It's been awesome. I know you've touched on a few things that I forgot about, which is,
Right.
I hope some of the listeners were able to pick up some of that. And, I'm always here. If you ever have any questions for me or you need some more information, please reach out to me. And guys, I want you to reach out to Rachel if you're stuck in a certain situation or you just want to know how to start. Rachel, what's the best way people can reach you at Holland and Hart?
So they can email me. That's probably the best. And my email is rkgillette, GILLETTE at hollandhart, and that's HART.com. And I'm going to give you my direct phone number too.
All right. Let's give it to him.
I'm at my desk every day. A lot of times talking to the IRS. I believe it's 303-295-8241, but it might be 8421.
Let me look real quick while we're talking. Yeah, because I want to make sure that's right too. So direct line is 303-295-8241.
Okay.
That is, so you had it right. And then RK Gillette, GILLETTE at hollandandhart.com. And then
it's actually ETTE, like the razor blade.
ETTE. Yes. Yeah. Okay. We will have editing fix this for us. Brooke, will you take care of this and align this? So with that said, you will also be able to go to my website at plantproblem.com, and it's plantproblem.com, and we'll have all of Rachel's contact info there, so you can find her there as well. I want to thank you guys for listening today. I know this was a bit of a longer episode, but this stuff is, at the end of the day, I can't stress how important it is to understand what you're getting into in the taxes of cannabis and the cannabis industry itself. So thank you guys so much for joining me today. Rachel, awesome. Thanks for being on the show. And I look forward to talking to you in the future. And you guys have a wonderful day, and I'll catch you next time on Plant Problems.
Take care. Bye.
You've just listened to another insightful episode of Plant Problems. If you like what you heard so far, don't forget to tell your friends and colleagues. For additional resources or to leave a review, head over to plantproblem.com. Join us again next week on Plant Problems with Tony Frischknecht. We look forward to having conversations with you as we go along this journey.